Hello and welcome back to the Geordie Pig Investor channel, where we dive deep into the world of dividend investing to help you build a portfolio that pays you. Whether you're just starting out or looking to maximise your passive income, this channel is your go-to resource for strategies, insights and the tools you need to grow steadily over time. Hit that subscribe button and join me as we explore how to make your money work for you, one dividend at a time. In today's video, I'll be breaking down my entire Trading 212 portfolio, showing you all the different ETFs and stocks I currently own. I like to keep things fully transparent, which is why I share every position in my portfolio and how it's performed over the past month. And if you didn't know already, I've already started a series where I go into detail about exactly what I've been buying and selling each month. So if that sounds something interesting to you, definitely check it out after this video. It's been an interesting month in the markets, with my portfolio seeing a negative return for the first time in 7 months. This doesn't show the full picture, so let's now jump over to my Snowball Analytics page to really see how I've been getting on. As we can see, my portfolio has been on a really strong month since May, posting 6 positive results. However, over this last month, we can see that my portfolio has seen a loss of just over £1,000. When taking a closer look at it, we can see the portfolio started off the month in the red and never seen a green day. Throughout the month, the portfolio continued to drop, and the lowest point it got to was around about £2,600 down, which was a negative 4.5% return. However, over the last few days in the month of November, it did have a slight recovery and ended up down just over £1,000, which is the equivalent to negative 1.7%. And when comparing my portfolio against the S&P 500 and the FTSE 100, we can see that I was beaten by both of them over this last month. I've actually managed to outperform the FTSE 100 for the most part of this year, but I found it tougher to outperform the S&P 500 since April. From January through April, I was actually ahead of it, but since then I've been trailing slightly behind. Having said that, it's not something I'm concerned about though. I'm not actively trying to beat the market. My main focus is on building a strong dividend portfolio with consistent income and long-term dividend growth being the ultimate goal. It's actually pretty cool to see that on July 15th, my portfolio hit that massive £50,000 milestone for the first time. In my last update, I came quite close to hitting the £60,000 milestone, but with the pullback recently, it looks like I might have to wait till the new year to achieve this one. But who knows, let's just all hope for a Santa rally. One of the main reasons why I love being a dividend growth investor is knowing that no matter how much my portfolio is up or down in a month, my monthly dividend payments are unchanged, and this means I can sleep well at night. This is something that always puts my mind at ease and helps me see the positives if the market is down. But as you can see here, my portfolio has still had a lot of green months so far this year, and overall we are up close to £3,800 year to date. And overall the portfolio is now up just under £7,000, so let's dive into the portfolio itself. On the screen, you'll see that my Vanguard S&P 500 ETF is still the biggest holding in my portfolio at close to 20%. It's then closely followed by my JP Morgan Global Growth and Income ETF, which takes up around 17% of my portfolio. The goal is to eventually increase their combined allocation to around 40% of the portfolio, so I'm pretty confident I'll be able to do this at some point in 2026. We can then see, as I continue to scroll down, that I do have around 8 positions currently in the red compared to 16 that are in the green. Luckily for me, 5 of my red positions are an under 2% allocation, so they don't have that big of an impact on the overall portfolio value. This month has been action-packed, with a couple of my stocks performing really well, but the majority actually ending up in the red. As always though, I like to keep things completely transparent, so that's why I'll be sharing all the results with you now. As we can see, only 6 of my stocks ended up in the green for November, and the worst performer in my portfolio this last month was my Coinbase ETP, as it was down 23% and had a loss of £150. As we can see, my overall position is now down just over 15%, and this is mainly due to Bitcoin's volatility over the past month and due to the fact that ex-dividend date was yesterday, so the price always drops in line with this. My next payment from them is going to be around £20 this month. And I'm not too concerned, as over the long term, I'm still very bullish on Bitcoin, so I'm still going to be happy to hold on to this one. When it comes to dividend tracking apps, Snowball Analytics is hands down one of the best out there. Look, if you're investing and you need a good portfolio tracker, this is like the Rolls Royce of portfolio trackers. I've been using it since day one of my investing journey, and it's been a total game changer. So you're going to have no more wrestling with spreadsheets. You can check out your whole portfolio or go deep into individual stocks, and for dividend investors, this is where Snowball really flexes. It tracks your income down to the penny, shows you an event calendar so you know exactly what's coming from your stocks over the next few months. It can even predict future income. And there's a backtest feature so you can see how you stack up against the S&P 500 or any index for that matter. If you want to try it, hit the link in the description. You'll get a free 2-week trial, and if you stick with it, there's an extra discount waiting for you at the checkout. The next worst performer in the portfolio was Zoetis, which saw an 11% loss, which equated to a negative £140 capital loss. As we can see, my overall position is now down just over 11%, and for me, this was a massive overreaction to their recent earnings call. They did have a nice spike last Friday, so hopefully the price will continue to climb into this month, and I'll also be receiving my first dividend from them this month too. And then we finally have BAE Systems, which were down 9.3%, which equated to a capital loss of negative £176. Overall, I'm still up around 42% on my position, and the recent drop was due to Trump trying to come to an agreement to end the Russia-Ukraine war, which of course has a negative impact on companies like BAE Systems. Again, I'm very bullish on this company's long-term future, so I have no concerns that over the long term they will recover and I'll see all-time highs again. And moving on to a more positive note, there were some strong gains in my portfolio this month as well. First up, we had Alphabet, which saw a 12% gain, which equates to a capital gain of £330. As we can see, my overall position is now up 86.5%, and I'm hoping this one could be my first position across that 100% mark in the portfolio in the near future. My only regret here is that I didn't load up even more into the company when I did a stock analysis video on them earlier this year when they were priced around $170. And then my best performer this month was British American Tobacco, which was up 13%, and I had a gain of £185. As we can see, my overall position is now up nearly 92%, so it's actually my best performer in the entire portfolio, and I've no doubt it will rival Google to be my first 100% gaining stock. Bats just keep surprising me, because even after last month's pullback, I was very shocked to then see they've rallied a further 13% this month, especially with them paying an already very generous dividend yield. So overall, it's been a busy month, but more so on the negative side. But with every negative, there's always a positive. And with these pullback in prices, I felt I found some great opportunities to add to some of my holdings, which you will find out more about in my monthly buys and sells video. So stay tuned for that one. Alright, so here's something new I'm adding to my monthly update series. Each month, I'm going to compare my predicted annual dividend income from last month to this month to see how much it's grown. For anyone new here, PADI represents the total amount of dividend income my portfolio is expected to generate over the next 12 months, assuming I don't add any new capital and none of my holdings increase their dividend payouts. Last month, on November 1st, as you can see, my PADI sat at £3,157. And thanks to the dividend reinvestments, the stocks I've continued adding to, and a couple of nice dividend hikes in my portfolio, it has now jumped to £3,194, which is an increase of £37 in annual dividend income, completely passive. If you want to be able to keep track of your own predicted annual dividend income, then make sure to click my link in the description down below to trial Snowball Analytics for a 2-week free trial and then get a further 15% discount when you sign up. If we look back to the start of the year, my predicted annual dividend income was just over £1,000. Since then, it's grown a significant amount at over £2,100, and while I did invest in a few ETPs and some higher yielding funds this year, which definitely helped boost the total, it still highlights just how how much progress I'm making. And let's now have a closer look at how this looks when it's broken down into a weekly, daily, or even hourly rate. I thought it'd be fun to see what my dividend income would look like as an hourly rate and if it were based on a full-time job on a 40-hour working week. Right now, it works out at about £1.54 an hour, which definitely isn't a livable wage, but it's still progress. Luckily, I don't need to rely on this income yet, but who knows? If I can eventually grow this amount to around £12 an hour, that would equate to a yearly income of over £24,000 a year, completely tax-free, which would leave me in a fantastic position of becoming work optional. Of course, it's an ambitious goal, but it's one I'm determined to work hard towards every single day. So I thought this would be something cool to track every month so we can see how much closer I am to reaching the end goal. On a daily rate, I'm making £8.75, weekly rate at £61.42, and on a monthly rate, on average now, I'm making £266.17 completely tax-free in passive dividend income. And that wraps up my December portfolio update on Trading 212. It's been an interesting month with some solid movers, some not so solid ones, but that's all part of the process. Hopefully we will be able to end the year on a high. Let me know in the comments how your portfolio performed this month, or what your plans are for December, as I'm always keen to hear your takes. Thanks for watching, keep compounding and stay patient in the market because your future self will thank you. For now, this is the Geordie Pig Investor, over and out.